right, let's see who we got. Hey, I see Check the Logic. How are you? DC322, Sally, Brandon, Larry Adams, how are you? TD, Teresa Diaz, we'll be seeing you soon in New York. Lena Sandoval, Coffee Guy from New York. Good to see you again as well. Michelle, Julia, Chris. See you, Chris Thompson. We'll get started in just a moment here, everyone. It'll be a quick stream, a short stream, but I just left the office, so I'm like, you know what, might as well fire up the old live stream before I head back to Grand Central Terminal. I see Deb from Southeast Wyoming. Hope everything's going well over there. AJ Wells, thanks for joining Water Blazing. How are you? Hey, it's D. What's up, D? Victor, Peter, says you are back in the Wicked City from South Florida. Yeah, I just got back last night. I flew into LaGuardia Airport, the good old LaGuardia. But I had an amazing time. We'll talk about Florida in a minute. You know, every time I go back there, obviously, I mean, we'll get into it in a minute. I gotta remember to bring my microphone though, because the wind, with the winter, the wind is gonna go crazy. B-Ball is here, what's going on? Kelly Miller, it's good to see everybody. Hopefully you're having a wonderful 2026 so far. Starting the year off on a positive note. Trust and believe. Okay, I'm gonna go ahead and put my hood and my hat on because I need to adjust to the New York weather from being in Miami, Florida for the weekend. Of course, we're right outside of the Apple Store, the famous flagship outside of the General Motors building. We're also looking directly at the Plaza Hotel. And any day now, we're going to have the grand opening of Grand Army Plaza South, which I'm really excited about because they've totally restored the fountain here, right outside of the Plaza Hotel. All new brickwork. It's going to be a really nice public space. I'm really excited about it. Quickly take a stroll up by the Sherry Netherland before we make a U-turn and come back down. Arturo Garcia says hello from Denver. Welcome everybody from Denver, Colorado. Chris McDonald, good to see you from Northern New York State. And Eyeglass Lady says that was the fastest 2 weeks in Miami I've ever seen. Yeah, so that's funny. Now here's the thing. I'm going to go back down there for 2 weeks in February. So I will be back in Miami for 2 weeks in February. I'm going to be at the Miami Yacht Show, which is going to be a really fun time. I think you guys are going to enjoy it. I'm going to be covering a few events down there. I'm going to be checking out the yacht show. Alan is here. Hope you're doing well. But we'll go ahead and get started, everyone. Welcome back to Walks on Wall Street. It's a beautiful night in Manhattan. I just arrived back last night from South Florida, and I'm really optimistic about the economy overall. Just anecdotally, based on walking around and observing things, specifically observing the tourist season for 2025 for the holidays in New York. I mean, you guys saw it on the the stream, New York was freaking on fire. It was rocking. I've never seen this many people in New York City for the holidays. 6th Avenue was crazy. You know, all the tourist spots were crazy. The hotels, many of which I have very, very good friends at the Hyatt, Aman, you know, Essex House. I mean, they were at full occupancy over the holidays, so things are going really well. Obviously, in terms of that K-shaped recovery, because if you look at the very, very top portion, the high income earners, I'd say the top, I always like to round up and just say the top 10% of income earners in America, you know, things are really good, and that's been reflective in earnings, corporate earnings, which is why you've seen, you know, another double-digit year for 2025 in the U.S. equity markets, and I think we're going to have another positive year for 2026. There's a lot to talk about, you know, even though U.S. equities performed really well in 2025, they weren't the highlight. If you looked globally, and we've been talking about this on the live stream for years, I've kind of been telling everybody to look towards Asia, particularly in Japan and Korea. You know, some of the top performing equity indices in the world, one of which being the Nikkei index. Japanese equities are performing exceptionally well, and if you would have, you know, guessed that, I mean, really nobody was saying that, because, you know, the big stigma in Japan is that the Nikkei hasn't gone anywhere since 1989, right? You had that big top in 1989, and then you had Japanese stocks pretty much in a multi-decade correction. It wasn't until 2025 did the Nikkei index, the 225, hit a brand new all-time record high, and now we're really off to the races in Japan. And same with the Korean Kospi. Korean equities performed exceptionally well in 2025. I think that trend will continue for 2026, but the winner for 2025 in terms of stock market performance was Israeli stocks over in Israel. You know, even if we have a double-digit year here in the United States, you know, some emerging markets and foreign equities even outperformed. And we also have a big super cycle that has started, in my view, about a year ago in commodities, particularly precious metals. But we'll talk about that tonight as we stroll down Grand Central Terminal. We'll stroll down 5th Avenue to Grand Central Terminal. I just wanted to come on and wish everybody a happy new year. Hopefully your 2026 is going fantastic. And now I'll say hello to everybody in the audience. I see Stephen Bate. Always a pleasure to see you. Gary Carpenter. How are you, Gary? Thanks for joining as always. Land of the Mitten. Welcome. Larry Adams is so true. What's up, Larry? Mary Jace, Powell's replacement will be a good pal of Trump and do what Trump says. Yeah, you know, that's another topic we kind of have to talk about as it relates to the Federal Reserve. Lots of drama happening over the weekend regarding Fed Chair Jerome Powell. We'll talk about that as well. Hey, Kathleen, good to see you. Says, wish Kupang and Korea would get their financial issues in order. Good to see you, Kathleen. Patrick Connolly is here. Hope you're doing well. DC322 says the Fed is more independent from the president. Well, I mean, the whole problem with the, and I've kind of been out, my stance on this, right? My position on this is I believe that the market performs best when the market knows that the Federal Reserve is completely independent of, you know, the powers that be over at the U.S. government. Because you have fiscal policy, right? You have the fiscal side of the house, which is really dictated by the government. That's government spending, right? And then you have, monetary policy, right? So fiscal policy and monetary policy should be different. Like, we kind of know that, nod, nod, wink, wink, that, things get political. Reasonable minds can agree with that, both on the right and the left. But with President Trump, it's been very out in the open, so to speak. Like, there's no wink, wink, nod, nod. It's essentially Donald Trump hammering Fed Chair Jerome Powell ad nauseum. And that's one of the main reasons why I believe we have this massive bull market that has just started, in my view. Okay, this move has just started in gold and silver. And we've been talking about this move in gold and silver for a long time. I mean, I've been calling out this monster multi-decade cup and handle with gold. Gold right now, we're trading at like $4,600 an ounce. Silver, I think we hit almost $90. If you look at silver futures now, I think we're probably printing 90 as we speak. And that's normal price action, right? Oftentimes, I'll look on X or Twitter, whatever you want to call Elon's platform, and it'll be a lot of traders and pundits saying this is an unprecedented move in gold or an unprecedented move in silver. This is crazy. But there's nothing out of the ordinary on this move. If anything, it is exactly within historical norms for how most commodities tend to trade. Right? If you look at a monthly chart of gold or a monthly chart of silver, right? Zoom out all the way back to the 60s and 70s. This is exactly how precious metals trade. It is very boom and very bust. So when you have a big breakout over a key level in gold, it goes in a matter of weeks, okay? There's no kind of, random walk correction. It is the thing takes off like a bat out of hell. And that's exactly what we've seen with gold and silver. And then when you have your final blow off top in gold and in silver, you have these really, really harsh and drastic corrections in both price and time. This is 57th Street here in 5th Avenue. Just wanted to call that out real quick. Speaking of President Trump, we're standing outside his building right now. Stephanie, good to see you. Moon landings, silver won't buy you food. Maybe it will. It's putting some food on my table right now. Hey, Nicholas Prasad, good to see you. Hopefully you've been well. My 2026 is off to a good start too. Kent says, hey, aren't you in Florida? I am not in Florida. We are currently reporting live from 57th Street and 5th Avenue in Manhattan. DC322 says Powell always looks at economic conditions from his perspective, not the president's. Well, the Federal Reserve sets monetary policy based on the vote from all of the Fed presidents, right? And, I think things are getting a little bit nitpicky with the potential criminal charges against Fed Chair Powell. Overspending on this construction project. Now, here's the way I see it. Is there probably some wrongdoing there and some, contractors that got their hands greased? Probably. But not to downplay the situation. But guys, the federal government, right? And I'm not too sure if anybody's ever worked, at even a private company, right? But if you've worked at a private company, and if you've worked in the public sector department, like I used to do a lot of business in the SLED department at some of these tech companies, and SLED stands for state and local government and education, right? So you're selling to state and local governments and big public education institutions. And essentially, in order to win that business, they sent the government, or whichever organization you're trying to bid for, they send out an RFP. Okay, and that's called a request for proposal. And then you go on like a little bit of a bake-off, or it's called you bid on the project, right? And there's a lot of nonsense that goes on with that. Okay, there just is. Like, if we're being objective, we're not talking about, you know, right-left politics. There just is. So, you know, if you really wanted to be nitpicky on everything, yeah, there's some corruption going on, of course. But I think this is motivated mainly because Powell is not doing exactly what President Trump wants in terms of interest rates, in terms of the size of the balance sheet at the Fed. That's my personal take on it. Peter says the criminal charges were more because the Fed ignored numerous attempts to have a conversation with the Fed prosecutor. This will force a conversation. The Fed/Powell was acting. Yeah, I mean, you know, it comes down to, this is the way I think of the government. And maybe it's a little bit naive to think this way, but this is how I think. The US government is not as corrupt as some of the other governments around the world, but it is corrupt. Like, objectively speaking, there's corruption within the US federal government and at the state and local government levels. There just is. So if somebody really wanted to get you on something, right, or weaponize, you know, people use the term weaponize the Justice Department towards somebody, you can literally probably find something on every single politician. That's my take. Now, am I downplaying it? Am I sugarcoating anything? I don't personally think so. So the reason why I can sometimes come off as I'm defending Fed Chair Jerome Powell is not to say that, hey, everybody's doing corrupt stuff, so he gets a pass. No, it's that, unfortunately, the precedent has been set that there's, you know, underhanded dealings and, you know, palm greasing going on everywhere. So it's gotten to the point where if one particular appointed or elected official is doing something that, you know, the other side really, really doesn't like, you can essentially weaponize the justice system legally against them, because everybody's involved in some sort of underhanded dealing, and maybe it's not necessarily nefarious, right? Excuse me, maybe it's not necessarily, you know, blatantly nefarious, the dealings, but it could be a technicality. And if you want to bust someone's balls on that technicality, you could. You could. Anyway, this is St. Thomas Church here. And again, that's a slippery slope, guys. You know, not to dive too much into politics, but that's a slippery slope. Because then guess what happens? You know, the other party gets into power, and then they're getting everybody on tit for tat nonsense, and, well, it's technically what you did was illegal, technically, and then it gets nonsensical. Joe C, what's going on? Says, hey, Tom and everyone, how is everyone doing? I am doing very good. Very, very well. But I guess tying this back into, you know, these massive moves in commodities, particularly as we talk about metals, this is just one of those catalysts, right? And oftentimes I talk about, you know, if you're setting up a trade thesis, right? So you've worked your systematic process for investing, and the fundamentals are cooperating with the technicals, right? So if you have silver, forming this beautiful cup and handle, gold forming this beautiful cup and handle, and then you kind of see all the geopolitical stuff coming down the pike, you see what's happening with monetary policy. That is what I like to call the magic elixir. And when you kind of have all the stars aligning, it's sort of like, Aaron Judge steps up to the plate, the bases are loaded, and the pitcher for the opposing team sends, a fastball straight down the middle. Aaron Judge is going to step up to the plate and knock that ball out of the park, and he's going to give it everything he's got, right? It's, you kind of got to go big. And when you see those trades setting up, you have to go all in and take sick risk, right? It's sort of like what Stan Druckenmiller, who's one of the greatest traders or investors of all time, says. He's like, you kind of have to put all of your eggs in one basket and watch the basket very, very carefully. So if you see something in the market and you're very confident, right, you've done the work, all of the fundamental analysis aligns with the technicals, you've got to put on some significant size in that trade. You just have to, because even if you lose 5% of equity on that, the risk reward ratio is to what? Double the size of the account. And I believe this gold and silver trade has been exactly that. Not even just talking about the instability in global markets, right? This flight to safety, flight to hard assets, flight to maybe what you would call real money, right? Gold and silver, that kind of flight to stability. But talking about silver, it does have kind of knock-on effects to this AI and data center boom, right? Silver plays a very, very big part in all of that. So again, it's kind of like the technicals lining up with the fundamentals, and that's why you've had this monster move in silver, from 20 to now almost $90. Hey, MBA Elias, it's good to see you. Dennis, this is sound adherence to monetary policy. Mark says good evening. What's up, Mark? Josie says, have you seen the nursing strike? I have seen the nursing strike here. I have. NAV says there are always cost overruns due to uncertainty of inflation and unexpected technical situations. Good contracts. I gotta learn how to pause the chat. I wish there was a way for me to pause the chat so I could read a little bit easier. Kathleen says my dad started hoarding silver coins back in the 60s. Wow. Well, good for him. Must be sitting on a pretty healthy profit. Larry Adams is true. I bid hundreds of municipal contracts and didn't win one. The competitors were bidding pennies on the dollar, winning the bids, then making change orders. But I know that a change order, yeah, you're right, can only be a percentage amount of the contract. There's a lot of underhanded dealing with that. I have to say allegedly, obviously. But look, and look, I mean, you could even look up some of these cases where, there have been investigations by the FBI that shows, they'll do these sting operations that say, look, one of the decision makers, is getting their palms greased, and you'll have a guy from Verizon or whatever, not any company, list the company or a construction company that's going to do a big project. They'll be getting, they'll say, hey, if you award us this contract, we'll give you a little bit of a kickback. We'll grease your palms with a few $100,000 or something like that. Wayne says, Tom, if there were ever an indictment, it would almost certainly be about alleged false statements to Congress, not about Powell personally stealing money or cutting a corrupt contract. For sure, but you know that all bundles into it, to your point, right? It's a pain in the ass. It's, you know, a stress. And it's kind of like it's a deterrent, and it's sending a message to other people, right? Saying, hey, don't get on the wrong side of us, or we can and will break your balls. And it's a pain in the ass. Nobody wants to deal with that, right? But you're totally correct. So, you know, identifying these things, and this is why I always say, you know, there's always a bull market somewhere. Always. So a lot of people thought that, you know, now that, you know, Trump is really, really going after Powell, this is going to be really bad for stocks. I don't think so. I don't think so. Earnings growth, and I was doing a big post analysis of the year of 2025. I mean, earnings growth was a blowout, right? GDP print was an absolute blowout. And kind of the framework that I follow, generally speaking, is about 70% of the time, as we walk by Saks Fifth Avenue that filed for bankruptcy, but about 70% of the time when we have a positive GDP print, the S&P 500 is higher 6 months later, about 70% of the time. Now, that's not an exact science, but you know, investing and trading is all about setting the highest risk-reward profile as possible, right? You want to set yourself up with a huge asymmetric bet. You need to get a huge asymmetric risk-reward profile. And right now, right, as of right now, GDP growth is positive, and corporate earnings growth is better than most people have expected, and it should stay that way through 2026. Now, granted, 2026 is the midterm election year, which usually doesn't bode that hot for stocks, right? It's usually the first 2 years when a president just gets in. And there's a lot of data on this in terms of the first term or the second term. But usually in the second term, the first and the second years are the best years, with the first year being the absolute best of the second term. So what I wouldn't be surprised, right? What I would not be surprised that happens is, let's say we go into the summer and we really start to get the summer doldrums, where maybe the S&P sells off. We might have a 15% correction in the index. And I think that's going to freak out a lot of people. Because you got to remember, what is this? Oh, it's the pedicab guy. You know, after the holidays, I've almost kind of forgot about the pedicabs, but I just can't stand it when they blast music so loud. I don't understand. Apparently it attracts customers, but I would never get in one of those things when they're blasting that shit. If anything, it's a deterrent. Anyway, I don't know what I was saying. That's okay. Hey, Wad Banks, good to see you. Hopefully you're doing well. Hope your 2026 is off to a fantastic start. Solo 401. Good to see you. I'll give you guys a good shot of the Empire State Building. Yeah, type usernames is Powell versus Trump drama. Exactly. Hey, Adrian is here. What's up? Thanks for joining us. Oh, Julian says you were talking about a 15% correction. Yeah. So, and I think that's going to throw a lot of people off. So if you look at the data, and if you guys follow me on X, I really post a lot of in-depth charts and things like that. in April, right, that's when we had what I like to call the tariff crash. And if you remember correctly, I was like, the first follow-through day we get out of this tariff panic, you got to buy that. You've got to buy and you've got to add risk. And not every follow-through day will lead to a new bull market, but there's never been a new bull market that has started without a follow-through day. The first follow-through day we got in April, this market took off in a lockout rally, and we're up about 33% on the index from that follow-through day. And a lot of people were left out of the rally, a lot. You know, they thought, I mean, we were getting stuff on CNN. Hey, Professor, what's up?
Hey, Tom.
Professor Dario, what's going on? This is
How are you?
Professor Dario, all the way from Argentina we got.
Hey, see you guys.
What's
How
going
are you?
on?
Just working.
Yeah, we're gonna have to get coffee again.
Okay, I follow you.
Yeah,
Go ahead.
I'll text you tomorrow. We'll get some coffee.
Okay.
Yeah, have a good one, man.
Yes.
I'll see you tomorrow. That's Professor from the chat. He's staying in New York for about a month. And before I left to Miami, I was able to meet up with him for a few days, grab some coffee. He's a really interesting guy, really nice guy. You can learn a lot from him. He is probably one of the smartest guys I've met. He has a PhD in biomedical sciences, I think, from the University of Argentina. Really, really fascinating guy. But in any event, you know, a lot of people, like, we were even seeing some crazy things. I was watching this clip from CNN, and that very famous analyst Dan Ives was on. CNN was breaking out a whiteboard and said that there's going to be no container ships coming into the United States because of these tariffs. And we're about 2 months away from having no food on the shelves. And you're not going to have any Christmas presents in December. There's going to be no food at Target and Walmart. And I remember I retweeted that and I said, this is the biggest load of nonsense ever. And I said, I can't give any advice, but I think you should go out and buy equities across the board. And that was like 2 days from the low. So the point I'm trying to make is I would not be surprised if we kind of get some sort of event like that. Because if you look at the consumer sentiment numbers, consumer sentiment is diverging from price of equities and really diverging from the overall picture of the US economy. Now, I understand it's a very K-shaped economy, right? We all understand that. I'm not trying to downplay that. But you have, you know, equity indices rocking to new all-time record highs, right? You have really name your asset class rocking towards new all-time record highs. But you have consumers have such a bleak outlook on the overall economy and the market in general. So when we do sell off, you may have a little bit of a more exacerbated sell-off, kind of like what you had in April. Maybe the S&P will go down 15% over the summer, and everybody will be calling for the top. That's the big one. You know, this is going to be the next 2008. But what's most important is to watch the earnings growth and to watch the earnings trajectory, and particularly the earnings estimates for full year 2026 on the S&P. And if those are not being revised down, well, let me rephrase that, because I actually don't care what a lot of the analysts think. I care about what companies are saying. So long as we don't have actual earnings coming in that are lower than 2025, and the fundamental picture from what the companies are reporting remain strong, I think that'll be a monster buying opportunity. Monster buying opportunity sometime around the summer. Now, nobody knows what's going to happen. I don't know. But, you know, making a fun prediction for 2026 as we do every year, you know, maybe this summer will be a little bit rocky. sell right before the midterms. Not a lot of people get freaked out right before the midterms. There's potentially going to be a lot of policy changes coming into effect. So maybe the summer will stink for stocks. And then, in November, you might rally into that because everything has already been priced in. Does that make sense? Because usually the markets move first. You'll have stock prices move first. So before, like a few months before November, all the elections, maybe you'll have a big sell-off. And then the market will continue to rally and climb that wall of worry into November. And then after the midterms, we have just a gargantuan Santa Claus rally. And we close the S&P 500 at new all-time record highs, but with above average volatility. I don't know, that's kind of my prediction for what it's worth. I gotta stand back here for a moment because I gotta show you guys one of my new favorite buildings in the city. This is right on 43rd Street and 5th. This is 520 5th Avenue. This is going to be a brand new condo building that's a little bit reminiscent of 130 William down in Lower Manhattan. Patrick Sykes is here. Good to see you. Hey, Mike. What's up? Chris, welcome. Old Tape Archives is Tom. Much wealth is built from market corrections. Oh, of course. And that's a really, really good point that Old Tape Archived just made. Because if you do a post analysis on your trading and your investments, the best performance in terms of when your account really, really starts to compound out and grow is roughly maybe 2 to 3 months after the follow-through day. And that is when the uncertainty of the move is the highest, right? And this happens, again, if you do a post analysis, you see this happening time and time again. These V-shaped bottoms, you saw it in 08, you saw it in 2020 with the pandemic. The explosiveness and the ferociousness of the move happens in that time period, about 2 to 3 months, maybe 4 months after the follow-through day, and that's when participation in the move is the lowest because everybody doesn't believe it. It's called climbing the wall of worry. Everyone's like, no, it'll retest the bottom. I'll get it on the retest, or it's going to roll over. Or, the stocks are extended, I'll wait until a pullback, and then the pullback never comes. And then we break new all-time record highs, and that's when people kind of get sucked in. And you'll still make a lot of money on the move, but you'll notice stocks act so much more choppy. And I notice this every time in my own trading account. Like, I can kind of get a sense and a feel, because you've been doing this for over a decade now. Well over that. It's crazy to think about. Look at this guy running in the middle of the road. But you can kind of get a sense of a choppiness in a stock. And if you go across the board of all the true market leaders since April, Robinhood, Palantir, Broadcom, what were some other amazing winners? Netflix was a great winner before that topped. They all kind of take off like a bat out of hell, and then they have this slow grind higher. And most people get caught in the slow grind higher when the volatility increases and the stock is very choppy, and that's kind of what shakes a lot of people out of it. All right, now we've made a left. Headed over towards Madison Avenue and then towards Pershing Square. be for 2026. The tax bill will pump over $200 billion in the economy from refunds, since old withholding tables were used in 2025, but the new one is retroactive January 2025. Yeah, you're right. What is it? The Trump's Big Beautiful Bill, or whatever he calls it. Some crazy, nonsensical name. But you're exactly right. 2026 is set to be the largest stimulus in terms of tax returns, in terms of the overall dollar amount of tax returns that the American people are going to get. It's going to be massive. And I was reading this article in Barron's about 2 weeks ago saying that it's going to be the most stimulative event since all of the, the COVID money printing. So, those are, again, what Peter's saying, those are different catalysts that continue to stack up in our favor, right? So it's important when, so much craziness is going on in the world. And again, it doesn't need to be political. You don't need to be on the right or the left to understand that the amount of cartoonish levels of craziness, okay, not just craziness, just cartoonish levels of craziness that are going on right now, that are really meant to distract, that freaks a lot of people out, right? What's going on, in Venezuela, what's going on now in Iran, over the last 2 years with this war in the Gaza Strip. It was so much craziness that freaks so many people out. But guess what? Markets continue to scream higher and climb that wall of worry, which unfortunately is the most opportune environment for stocks to take off, right? Nobody would have ever expected, post October 7th, that Israeli equities would be some of the most not some of the most, the top performing equity indice in the world is the Israeli indice, right? Nobody would have ever thought, shamelessly except me, I'll give myself a pat on the back, even though I've been wrong about so much, that the Japanese Nikkei index would be smashing through new all-time record highs and have some of the highest returns in 2025 when you read doom after fear porn article about how there's going to be no Japanese people and the population is going to collapse, and there's going to be no more Japanese people in 10 years. And then it's the top performing equity indice, while the public's exposure to equities in Japan are at all-time record lows. It's the same thing in Korea. When I was traveling through Asia, I've kind of realized this as well, right? And I've studied this extensively. After the Asian financial crisis, particularly in Korea, so many people lost so much money on stocks that it really scorned an entire generation. Into what I like to call post-traumatic stress disorder. And Americans got this post-2008. And what it's really done is turned a lot of Koreans and Japanese away from owning stocks. A lot of Koreans that are getting ready towards, retirement age, they don't have any stock exposure. They just save their money in the bank, and with interest rates over there, they'll make like 4 or 5%, right? But if you look at the Korean Kospi, double-digit returns, smashing through new all-time record highs, and many, boomers in Korea have missed the participation in some of the world's best companies, right? Like SK and Samsung. So usually, what precedes the worst periods of performance will be the best periods of performance, but that nervousness and the fear keep a lot of people out. So it's very important to kind of crowd out that noise and be very, very steadfast in your investing, because things are going to be crazy, right? The world is a volatile place. It's not all sunshine and rainbows out here, right? There's a lot of sick shit. But there's also a lot of really, really good stuff going on. And you want to be able to be a part of that. You want to be able to be a participant in that activity. And I think there's no better time to be a participant than right now. And that doesn't necessarily mean, investing in terms of you're buying and selling stocks. That's an investment in terms of, taking a risk, applying for that job you always wanted to do, start that company you always wanted to start, because the access to information has never been greater, right? The odds have never been stacked this high in your favor, while at the same time we have exposure like never before to all of the negatives. So the people that will really succeed are those that will be able to kind of reframe what's going on in the world, focus on the opportunity, and not let all of the crazy, horrible things that are going on in the world, scare them out of a good investment. At least that's kind of the way I kind of frame it towards myself. I want to take you guys right here because I want to show you this great shot of the Chrysler building right on the corner of Lexington Avenue and 43rd Street. This is one of my favorite buildings in New York. Hey, Brad's Brain, what's going on? Good to see you. This is There Is Always Opportunity, absolutely. Tofu Shoots. This is I Want to Live in New York City So Bad. I would recommend it. I would recommend it. Elliott Wave Reviews is Tom, you bought gold and silver. NBA Elias is Tom, the best example of profiting off of the downturn is John Paulson's $20 billion gain shorting the housing market before the 2008 real estate collapse. We'll check out this pizza spot and then we'll head back to Grand Central. But MBLIs, I would agree with you, and I would reframe it a little bit, right? And this is a good story to tell because almost all of the big financial stories in terms of investments, right? The most famous investments, right, in the market. Do you guys notice how almost all of them are on the short side or betting something is going to collapse and explode and it's going to be doom and gloom? Does anybody notice that? Very, very seldom are there movies made about, a monster trade to the upside, because it's not really exciting, right? It's not exciting, to make a movie about, somebody, Ron Barron buying Tesla at $1 or, being in the IPO, never selling a share and making $6 billion on the trade on the long side. That's not really exciting. That doesn't really make a good movie, and it's not really a good story. And the reason for that is persuasion, right? If you think about the most persuasive emotion, it's fear. Fear is the most persuasive, right? Nobody wants to be fearful. Oh my gosh, something's gonna happen, doom and gloom. And that's why you see these movies do so well. The Big Short is probably the most famous one with Michael Burry. But it's also the most encouraging, and I'll tell you why. First, let me give a shout out to this $1.50 pizza spot. This is the best dollar slice pizza place in Manhattan. With the inflation, it's now $1.50. But this is actually quality stuff. Not being sarcastic, right? Here outside Grand Central Terminal. But here's why it's so encouraging. Michael Burry, right, in terms of his directional bias, has been wrong the majority of the time. But he's still a billionaire. And that's the beauty of the investment business. The beauty of the investment business is you really only need to be right once or a handful of times to make a fortune. You don't need to be right all the time. Investing is actually not about being right. It's about, putting on the appropriate size and being very profitable when you're right. So Michael Burry, right, what he's most known for is a massive trade to the short side. That's where he made the lion's share of his money. But he's been very, very pessimistic really since the lows of '08 on a lot of the top leading stocks. So you don't need to be right all the time. You can make a ton of money shorting the market. You can make a ton of money being long the market. It just matters how right you are when you're right. Right? You could be the best stock analyst or the best really global macro analyst in the world and make the least amount of money. That's what's so interesting about this business. Like, if you think about that, you could be right on everything. You could be literally make the best predictions on everything and make no money. Right? I mean in my career, there's the trades I've felt most confidently about, and I'm like, oh my gosh, this thing is gonna rip. I've made almost the least amount of money on those ideas. So I didn't size it correctly. I didn't have the right size on there. I was right, but it doesn't pay to be right. It pays to make money and size the position appropriately and handle these stocks well. So I'd say that's the most encouraging thing about markets overall. You know, if you're someone that's frustrated, you know, you seem to be wrong all the time, that's okay. That's okay. Because if you take a bunch of trades and you're wrong a lot of the time, but you cap your losses to, you know, maybe 2 or 3% of equity, if you continue to work your system and never quit at it and just keep trying a bunch of stuff, you're going to be really successful in America. And it doesn't necessarily, again, just have to apply towards the stock market. It could apply to your career, right? If I would bet if everybody does a post-analysis of their careers, right, and whatever it is, maybe you're a doctor, lawyer, investment banker, you know, private equity guy or girl, or software salesperson, you've probably made the lion's share of the money in your career on like 1 or 2 big deals, or you had a huge promotion where you made a large jump in your salary or something like that based upon just one opportunity. But the vast majority of the time, it was a slow grind. You've had a lot of failures, setbacks, but when you were right, you made these huge legs up in your career. And that's kind of how life is. You kind of have to hang in there. You got to be willing to get beat up all the time and just get back up. You got to be willing to fail a bunch of times, and even you got to be willing to look like an idiot a lot of the time. Here we are outside of the Chrysler building. Hey, Arun C, what's going on? We're back in New York after a short stint in Miami. Hopefully your 2026 is doing really well. Melissa 2087 says very quiet night. Out and about from Toronto, Canada. Thanks for joining. Yeah, Kathleen says yes, but the baby boomer babies were warned by their parents who grew up through the Great Depression. It took more than one generation to overcome market hesitancy. Yeah, like, you know, if you put your hand on the hot stove, you're probably not going to put your hand on the stove again. Well, I'll be back in Miami for the Miami Boat Show. That's going to be a lot of fun. Oh wow, Melissa 2087 says, Tom, I was just in New York City on Sunday. I saw MJ the Musical. You are correct. Amazing show. It was an amazing show. An amazing show. For those of you unfamiliar with what we're talking about, Michael Jackson the Musical is playing on Broadway now in New York City, and it's an unbelievable show. The cast is great. I would highly recommend going and supporting that cast, and it is a very entertaining program. So we'll see, you know, kind of throwing this back to markets. You know, you think about consensus, you think about what is the most unlikely outcome for the market this year, where we have so much events that will create uncertainty, right? And we've already had a lot of events in 2026 that creates a lot of uncertainty, with this whole thing in Venezuela, overthrowing the government, you know, taking Maduro right here to New York City. We have a lot of stuff going on in Iran right now. That could pop off any minute. And then it's a midterm election year where things are going to be, I mean, if you think the distractions were crazy in 2025, just give it a few months, okay? It's going to be cartoonish levels of craziness from the political spectrum, from the right, from the left. It's going to be nuts. Then you have this whole thing with Fed Chair Jerome Powell and President Trump. So you have a lot of things stacked on one side to keep a lot of people out of the market. But the story that trumps all, no pun intended, is the earnings. Is the earnings. And maybe a little bit of an interesting trade that we'll talk about later, which is, you know, potentially underperformance of the main hyperscalers, but going long the things that the hyperscalers are spending on. Right, so there's a little bit of nervousness in the market, and the market's kind of showed its face that, hey, you know, a lot of these hyperscalers are spending a ton of money, but we're going to pump the brakes on buying the stock, because maybe it comes time where the hyperscalers need to start selling stock or selling securities, right? Maybe down the pike, a lot of these hyperscalers are going to have to start selling a lot of their stock to pay for these capital expenditures, to start selling bonds. Maybe they'll start having to tap the bond market. So maybe the trade is go long what they're spending on, which they're going to be spending a lot of money on energy. They're going to be spending a lot of money on construction projects. They're going to be spending a lot of money on semiconductors. So we'll talk about some interesting pair trades coming up this year. Oh yeah, I see caps as end Greenland. That's going to be another debacle, but it's going to be a good year. Anyway, if you guys enjoyed the stream, feel free to leave a like on the video, subscribe to the channel if you're new, and we'll see you guys soon. And I did want to say, we unfortunately had Scott Adams pass away today. So rest in peace to Scott Adams, the creator of Dilbert. We'll leave it off there. Take care, everybody.